Hey everyone, and welcome back to the channel. Today, we're diving into a fascinating question that has been buzzing in the financial world. Did gold's recent dip just signal Bitcoin's next all-time high? It sounds a bit wild, but there's a compelling story here about how these two assets, one ancient and one digital, might be more connected than you think. Let's start with what happened. So gold, the classic safe haven asset, take a noticeable dip. Traditionally, when there's economic uncertainty, investors flock to gold. It's tangible, it's been a store of value for thousands of years, and it's seen as a reliable hedge against inflation and market volatility. But this time, something different seems to be happening. As gold's price pulled back, we saw a surge of interest and capital flowing into Bitcoin. This has led many analysts to ask, is Bitcoin finally stepping into the role of digital gold? For years, this has been a major part of the Bitcoin narrative. The argument is that Bitcoin shares many of gold's best qualities. It's scarce, with a capped supply of 21 million coins, which makes it inherently deflationary. Just like gold, it's durable, portable, and indivisible. But unlike gold, it's also digital, decentralized, and incredibly easy to transfer across the globe without needing a bank or a middleman. So, when we see money moving out of gold and seemingly into Bitcoin during a period of market uncertainty, it suggests a potential shift in investor psychology. It's possible that a new generation of investors, who are more digitally native and comfortable with technology, are starting to see Bitcoin as their primary safe haven asset. Instead of buying a gold bar and storing it in a vault, they're buying Bitcoin and storing it in a digital wallet. Think about it this way, for centuries, gold was the ultimate hedge against failing currencies and unstable governments. It was the plan B for wealth preservation. Now, with the rise of the digital age, Bitcoin is presenting itself as the 21st century version of that plan B. It's a decentralized, global, and censorship-resistant asset that isn't controlled by any single government or central bank. Let's look at the charts for a moment. If you overlay the price action of gold and Bitcoin, you can sometimes see an inverse correlation, especially during key market events. When one jigs, the other zags. This recent dip in gold, coinciding with our rally in Bitcoin, is one of the clearest examples we've seen in a while. This isn't just a random fluctuation. It could be a signal of a massive transfer of value and belief from the old world of finance to the new. Now, why is this happening now? So there are a few factors at play. First, we have increasing institutional adoption. Major companies, investment funds, and even governments are starting to hold Bitcoin on their balance sheets. This gives the asset a level of legitimacy it didn't have just a few years ago. When big players treat Bitcoin as a serious store of value, it encourages retail investors to do the same. Second, there's the macroeconomic environment. With rising inflation concerns around the world, people are actively looking for ways to protect their purchasing power. For a long time, gold was the default answer. But with Bitcoin's performance over the last decade, it's making a strong case for being a more effective inflation hedge. While gold has provided steady, reliable protection, Bitcoin has offered explosive growth potential. And third, there's a generational wealth transfer underway. As younger generations inherit and accumulate wealth, their investment preferences are different from their parents and grandparents. They grew up with the internet, smartphones, and digital assets. To them, the idea of a secure, digital store of value isn't strange, it's intuitive. This demographic shift could be a massive long-term tailwind for Bitcoin. So, what does this mean for Bitcoin's price? If this trend of Bitcoin replacing gold as the preferred safe haven asset continues, the implications are huge. The total market cap of gold is estimated to be over $12 trillion. Bitcoin's market cap, even at its peak, has been a fraction of that. If even a small percentage of the capital currently stored in gold were to migrate to Bitcoin, the price of a single Bitcoin would have to increase dramatically to absorb that inflow. We're not just talking about a small jump. We're talking about a potential paradigm shift that could send Bitcoin to price levels that seem unimaginable today. This is the core of the argument for why gold's dip could be a leading indicator for Bitcoin's next all-time high. It is like watching the moment people started trading in their horse and buggy for the first automobiles. Gold is the reliable horse it's worked for a long time. Bitcoin is the new, faster, more efficient automobile. And right now, we're seeing more and more people heading to the dealership. Of course, it's important to stay grounded. Bitcoin is still a much more volatile asset than gold. Its price can swing wildly, and it's subject to regulatory headlines and market sentiment. This journey won't be a straight line up. So there will be corrections and periods of consolidation along the way. Gold isn't going away overnight either. It will likely remain an important asset for many investors for years to come. But what we are witnessing is a change in the narrative. The conversation is shifting. It's no more longer a question of if Bitcoin can be a store of value, but rather how much of gold's market share it can capture. The recent price action is just one piece of evidence in a much larger puzzle. It suggests that the digital gold theory is moving from a niche idea to a mainstream investment thesis. So, when you see gold's price falter while Bitcoin rallies, don't just see it as two unrelated market events. See it as a potential signpost on the road to a new financial landscape. It could very well be the market whispering a secret about where the smart money is heading next, and that destination could be an all-time high for Bitcoin. The big takeaway here is to pay attention to these intermarket relationships. The financial world is deeply interconnected. The story of Bitcoin is not just about technology. It's about economics, psychology, and the evolution of what we, as a society, consider to be valuable. And right now, the signs are pointing towards a future where digital value is taking center stage. Thanks so much for watching today's deep dive. This is a super exciting topic, and I'd love to hear your thoughts in the comments below. Do you think Bitcoin is the new digital gold? Let me know. And if you enjoyed this video and you want more content like this, make sure to hit that like button, and don't forget to subscribe and turn on notifications so you never miss an update. See you in the next one.